Welcome to the July 23rd, 2021 video version of the Wagner Daily. My name is Rick Petticelli. As usual, every Thursday night, this video replaces the written commentary portion of our report. Hopefully it serves as a nice change of pace and offers some insight as to how we set up our charts, what time frames and indicators we use. And as you can see here, we try to keep it very simple. Just a few moving averages, an RS line here, price and volume. Same goes for the weekly chart. Nothing fancy, and that's the way we like it. In tonight's video, we're going to run through a few broad market averages, then cover open positions in the model portfolio, and finally we'll take a look at what's out there in terms of new setups during the next few days. First up is the Nasdaq Composite, which went from a sell signal, which after the close below the 20-day EMA on 7/16, we were on a standby sell signal. If the price action broke the 20 the next day, that would have confirmed the sell signal, which it did on a gap down. But the index staged an impressive reversal the next day, taking out the prior day's highs and reclaiming the 20-day EMA. And after Wednesday's follow-up on the prior day's gains, we placed the timing model back on a buy signal due to the impressive recovery, and we also noticed some solid price and volume action and growth stocks as well, which is our main focus here in the report. So we're not just looking to the price and volume action of the Nasdaq for our buys and sells. It is the combination of what's going on in the Nasdaq and how our watch lists are acting. So with a pretty sharp move off the lows, at some point here we can expect a day or two of chop. And flipping to the hourly chart here on the right-hand side, the price action is pretty extended in the short term from this 20 EMA. So a touch of the 20, be it around this 1460 area, or if it moves higher and then pulls back in a bit, wherever it may be, we're looking for a test of that 20 to provide support. And back to the weekly chart, the low of the pullback coincided with a touch of the 10 EMA and a test of the highs of the last base. So it's a logical area to find support, which wasn't much of a surprise. It's just the way the price action snapped right back was quite impressive. And onto the S&P 500, nice recovery off the 50 MA. And as discussed earlier in the week, there's no change of character here. So far, the past few months, every time the S&P has undercut the 10-week MA during the week, it's bounced back with a close well off the highs of the week, as it did twice in May. Although it closed at the lows of the week in mid-June, the next week, price action snapped right back to new highs. And this week, of course, there's the undercut of the 10-week and a powerful reversal back up. So no change of character here. Although we monitor the S&P 500 daily, we're more focused on the Nasdaq Composite as well as IWP, which is a mid-cap growth ETF, which bounced off the 50 MA. Nice snapback from the 50. And as you can see on the weekly chart here, it bounced off this downtrend line after undercutting the 10-week. So that's bullish price action. And from here, whether or not it needs to pull back in for a week or two, or maybe just a day or two and then move higher, we don't know. But so far, the indices and ETFs we monitor are looking pretty good. As for open positions in the model portfolio, DOCS was an official entry and it triggered on Thursday's open. However, we did send an alert to cancel the setup in order to prevent anyone from going long, because it did rip early in the morning. We didn't want anyone to go long at 59 or 60 and pay up too much for it. So we canceled the setup. So while it's not an official setup, I'm assuming many of you may be long from the open around 57.20. You can continue to hold with the stop around 56.77 or 71. You can do that for half the position if you'd like, and place a stop in the other half beneath the 721 low, which would be a 6% stop. So you could either go really tight or split the stops up, or if you want to give it more room, go beneath the low of the inside day. ASAN broke out to new highs on a pickup in volume, a positive sign for what could have been an ugly session here. If we'll go to the 30-minute chart to give an idea of what happened here. Here's the first hour. Here are the next few hours of trading. The price just pulled it back almost to the day's low and then recovered. So a solid session, and we're up about 9% from the entry, around 67.60 here over the high of Monday's bullish reversal candle. And the other long position is Nvidia, which we purchased on a pullback after a big volume reversal on 7/19. We bought Nvidia around 184.79 and is now up about 6% from our buy point. And what we're looking at here is just a long consolidation. We finally get a strong move out, and this is just the first touch of the 10-week MA after a strong rally. We attempted to enter BNTX on a pullback. We had a buy limit order just around the 255 area. The price gapped higher and took off again, so no luck there. Next up is Snap, which is in play because of its reaction to earnings after the close on Thursday. The Snap closed at 74.10 on heavy volume, and that close puts it, if it holds, puts it around, well, 74.10 here, so that's above the all-time high. So that would be a breakaway gap up, again, if that holds. And if volume is strong, that would be a buy signal and really a priority buy for us here in the chat room. It might be tough to make this an official trade on Friday morning, as we just don't know where it will open. I mean, it could open up at 70 or 68 or 80. Either way, as long as it opens up above 74, we'll likely enter over the 1-minute high. And the same goes for Twitter, which also reacted favorably to earnings, though it did come back in a little bit off the highs. It closed around 73.50, which is right around this area. If it can open up above 74, that would be ideal. And if volume is strong, that could be another gap up candidate with an entry over the 1 or 5-minute high. ZI is an interesting stock. Unfortunately, it does report earnings on 8/2. ZI is interesting because it broke its downtrend line from March, and it's just sitting on top of that downtrend line, chopping in a tight range. And the weekly chart looks pretty good. So it's just something to keep an eye on, especially if it can clear 55 on volume. And SMAR, little cup with handle pattern here. Here's the handle. Cleared its downtrend line on Thursday. Not a lot of volume though. Can be taken with a reduced size, looking for the price action to hold above the 20-day EMA on a closing basis. And then what we normally do here is look to add as the price moves higher. And then the final add would be on a move above the handle high. For many who are unable to watch the market, maybe take a third or a half position here, and the other half could be at the handle high. So it just depends on how involved you want to be. You could also just not buy it at all here and buy the breakout above the handle high. LI is a monster mover off the lows. About 130% move in less than 8 weeks. Nice downtrend line break on Wednesday, followed by a tight range inside day on very light volume. Look for an entry above the 2-day high or on a pullback to the 20 EMA on the hourly. Looking for Thursday's low to hold or just a slight undercut of that low. So that's a wrap for tonight's video. Just a quick recap. Indices have staged an impressive reversal off the lows. Growth stocks are setting up. Some have already broken out. Some are close to breaking out. There are new setups emerging. Depending on how Snap and Twitter, if they gap up on Friday. How they hold up could provide more evidence. Overall, it looks like conditions are improving each day. And rather than make some kind of prediction here, let's just take it day by day and see what happens. All right, thank you for joining me. Have a great weekend, and we'll see you next week.